Welcome to the Remarkable Retail Podcast, Season 3, Episode 18. I'm Michael LeBlanc.
And I'm Steve Dennis.
Well, Steve, as you know, I spent a bunch of years in the as seen on TV retail, the TV retail with the shopping channel, which is like a QVC or HSN. And, you know, our guest today and his business model and what's happening actually reminded me of the go-go days of that kind of industry and how products got to market. Mm-hmm. Our guest today is Chris Bell, CEO of Perch.
Yeah, it's really, I think there's a few things that are interesting in this space. One is, you know, when we talk about Amazon, I think, and maybe I've got this wrong, but I think most listeners probably think of really the first party sales of Amazon. In other words, the products that Amazon carries and fulfills itself. But there's this whole world of the broader marketplace and fulfilled by Amazon. So we'll talk about that a little bit. But Perch and a few other companies are buying up these smaller retailers that sell on Amazon and kind of providing economies of scale and applying some of their expertise across the portfolio. And these companies have gotten some pretty rich valuations. So very hot area, really pretty new, really just emerged in the last couple of years. So it's interesting to dig into.
And attracting a whole lot of revenue, right? A whole lot of interest from VCs. Like there's literally billions of dollars pouring into this.
Yes.
I loved how you said it's a portfolio. That's how we used to view as seen on TV products. You wouldn't always know which one was going to hit. You know, you don't every day get a sham wow, if you remember the sham wow. But 1 out of every 10 would be a sham wow, and they'd pay for the other 9. Like it was always a portfolio strategy, right? So a lot of what he was talking about, I think it's more focused than that because there's already some success. It's a really neat model. So looking forward to getting to that. So I forgot we are taping this on Black Friday. So I just thought I'd call it Black Friday. We're taping it. Here's some of my Black Friday shopping underway. The malls are pretty busy up here in Canada, and there's lots of news coming out about down south. And we've got a new variant that I think actually could, in a weird way, drive this weekend faster and harder. Because people are going to be like, there could be a lockdown coming. I may have restrictions. Maybe I should do my shopping now. Like I think there's a bit of psychology at play. Who knows? We'll all figure it out. But anyway, I thought I'd mention that. That was kind of rattling through my head as I watched the news ticker feed today. What the impact on retail would be in the short and medium long term. Speaking of retail, let's jump into the news of the week. What's on your mind in terms of what's been happening this week in our industry?
Well, the big thing this week, as has been the case, I guess, for a couple weeks now, it's earnings season. So we got a bunch more earnings reports this past week. And as our standard disclaimers, we're not going to go through all of them in any detail, really just talk about what some of the highlights were and what it suggests. Overall, we continue to see, for the most part, we'll talk about an exception this in a minute, but pretty much every retailer seems to be beating on sales and seems to be beating on income. And again, this gets into this issue of expectations and why perhaps Wall Street's expectations were a little bit more moderate. But in any event, the overall picture has been quite healthy. Consumers clearly spending, whether that's stimulus, pent-up demand, you name it. And I think the earnings certainly are leveraging the cost structure that's been in many cases optimized better, but also just it's not quite as promotional an environment. A few I just wanted to point to very quickly. Best Buy was kind of interesting. Their sales were only up like 0.5%, and e-commerce was down 10% year over year, but that's double pre-pandemic level. But Best Buy was one of the retailers you probably remember that's really been on a tear. So whether the slowdown, they didn't talk too much about supply chain issues. It seemed to be more of a slowdown because they were comparing to really robust numbers from last year. But their profits were up nicely. But nevertheless, the stock got hammered. So maybe Wall Street's starting to wake up to this, what I sometimes refer to as the great moderation or the great rebalancing of some of these stocks that performed incredibly well, but now kind of reverting to the mean. Dick's Sporting Goods. Oh, the other thing on Best Buy I was going to mention, a few retailers mentioned, is this issue in the U.S. of a great increase in retail theft. Some of these organized
Yeah, yeah, I saw
rings,
that.
whether it's
Hmm.
being driven by desperate economic circumstances or what have you, but a number of retailers have pointed to that as a growing concern, and of course, sales associates then get nervous about being in the store. So that's definitely something to watch. A couple other
You
earnings
know,
that
my
were,
from what
yeah,
I know about, and just a few words on that. It is ORC, organized retail crime, and what they're taking advantage of, at least as we see it in the Canadian market, and I'm very sure it's similar, is this kind of mobbing effect you saw in San Francisco.
yeah,
And the reality is, the criminals being organized know that there's a number of policies in place where employees are told to back off, right, not to
right,
risk themselves. And then you also have police departments who are basically saying and sending notes out saying, we're not coming.
yeah,
Yeah, it's not important to us. And you
right,
put those two things together, and basically, it has fostered a type of crime, which is the kind of wave in, grab everything, be very loud, be very aggressive, be very noisy.
yeah,
Everybody backs off. You take what you go. It's also called walkout crime, which is really
right,
on the lift right now.
yeah,
In other words, just load up a shopping cart full of stuff and walk out. And
hmm,
I think you're now seeing the police rebalancing that a bit. They're putting out, we are going to enforce this. So these things reach a bit of a tipping point where the
yeah,
retailers have been really asking the police departments to get involved. We saw it in Vancouver in Canada, and until they got involved, but when they got involved, they arrest like 80 people. Like when they get involved,
yeah,
puts a tamps it down, gets on it. But the Best Buy was interesting because he was saying very specifically, we're seeing people quitting and we're having a hard time with hiring because people are, as you said, they're getting nervous and they don't want to be part of any violence. And
yeah.
this has got to be addressed.
Yeah, I think it's a big issue. And to your point with the organized retail crime, the word spreads quickly, right? Both in terms of where there are opportunities
Yeah.
as well as if there is a real crackdown, where to avoid. So, big issue. We'll see how this plays out. A couple other earnings I was thought was interesting. Dick's Sporting Goods, big sporting goods player in the U.S., continues to do really, really well. I guess some of this you could count or say is due to the COVID effect of people working out more, those kinds of things. Their sales were up 14%. Ecom was pretty much flat, but also just like Best Buy, double where it was on a 2-year basis. So again,
Mm.
that kind of rebalancing, but still very strong if you look back to where they were a couple years ago. Dick's is also an interesting company in terms of innovation. Not only have they done well in their core business, but they've been piloting, I think it's 5 different concepts, 2 of which they said they were going to be expanding. I don't think they're saying they're not going to be expanding the other 3. I think it's too early. But House of Sport, which is more of an experiential, since everybody loves that word, and Public Lands, which is a more kind of REI outdoor Cabela's outdoor kind of focused concept. They're going to be opening more of those. So a business that's got a lot of momentum. On the less positive
Yeah.
side was
I think,
Nordstrom.
but I think by the way, and I think by the way that the Dick's guys are trying to get ahead of Decathlon because Decathlon is coming to the American market, and Decathlon is a global powerhouse. And where they go, they make a
Yeah.
dent. They just opened a big superstore in Canada, and they're going to make a dent. Like Decathlon, maybe some of the
Mhm.
viewers know them. The big France-based sporting goods retailer. It's all private label. It's all their own brand and product. They're pretty impressive retailers. So I think they're
Yeah.
gearing. Typically, as is often the case, international retailers come to Canada and they say, "Well, let's operate here because it's not a far leap once we figure out Canada to head south, and it's basically a beachhead into the U.S. market." So something to watch out for there.
Hmm. Yeah. No, that's interesting. Um, so the other one, or 2 others I'm going to mention quickly. Nordstrom was a big disappointment. The stock really got hammered. Their department store, the kind of main full line department stores, were actually up 11%. But that was disappointing, I think, to a lot of people because Macy's, Kohl's, some others had reported much better numbers. I don't think it's surprising that Nordstrom's is not up as much because it's higher end, more going out kind of
Mm-hmm.
apparel. So that even though that part of the apparel market is getting better, it's still not anywhere back really to where where it was. But they were up overall 3% on a 2-year stack. So not terribly exciting. The big problems,
Yep.
though, were in the Nordstrom Rack division, the off-price division, which was down a lot, and that division has been struggling for a number of years. I'm not quite sure what's going on there. I know there have been some questions of sloppy execution. Neil Saunders, who was on our show, Fault in the
Mm.
Stores episode a few weeks back, has called them out. I think the overpriced market is in general probably a little oversaturated, and there's obviously some issues with the supply chain there. But that was the thing that really seemed to send the stock down. The
The off
digital
price.
sales,
I think it's the. I think you called it the overpriced market. You mean the
yes,
off, which is kind of a play on words. The off-price market is what we're talking about. That whole
yes,
category, that and Saks off fifth and all that. But I think that was a double entendre. So
yes,
congratulations
yeah.
on
Well,
that. You tucked that in.
sometimes these things happen, Freudian slips or whatever. Uh, a couple of other quick things to mention. Their digital sales were down 12%, but up 20% on a 2-year basis. Also, not as strong as
Mm.
a couple we mentioned, but a lot of other retailers have reported. Again, I think this is somewhat the nature of the merchandise categories they're in. But the other thing is that Nordstrom's now has 40% penetration. 40% of their business is e-commerce, which is about, I mean, it's very, very high for a player that
Yeah.
was principally a retail. So I think there's also just, it's fairly mature. So there's not as much to go up. But the
Mm.
thing that I thought was the craziest was after their stock got hammered, and we talked about off mic, Warby Parker going up on the COVID variant news. Nordstrom is now valued a couple $1 billion less than Warby Parker. Uh,
Unbelievable, right?
that just seems crazy to me.
Yeah,
So
it just
short
seems
Warby
crazy.
Parker, buy Nordstrom. You heard it here first. I don't give stock advice. You shouldn't take it. But if I were going to give stock advice, that would be the advice I gave. And last one
And
is
and worth. And by the way, as you often say, worth every
worth
penny you paid for
exactly what you paid for it. And because it's Black Friday,
it.
40% discount on the advice for the next 24 hours. So order today. But wait, there's more. Gap, also another disappointment this week. Stock down a lot. They claimed that they had a $650 million sales hit because they could not get product. It's interesting. That's one of the worst reports that I've heard of having such a shortage, whereas you
Mm.
have quite a few companies like Walmart, like Target, others that didn't seem to be hit by it nearly as much. So I don't know if it's because Gap is really its own brand and their whole that whole sourcing thing that was
Yep.
messed up, but
Yep.
that was about the most disappointing news I think from a major retailer we've gotten in this earnings season. So that's the earnings roundup.
Yeah, I just a comment on the Gap. I think you're absolutely right. And to me, what I thought of is they must have, in some way, shape, or form, consolidated where they make the product, and maybe they got unlucky with lockdowns in where they are making the product, right?
Yeah, yeah,
So
I think so.
that could and as you say, unlike a mainline retailer, they can't just switch suppliers. It's got their name on it. It's their product. Neil
Mhm.
Saunders had a few things to say about their assortment. If you check out, which
Yes,
leads me to believe it was a miss on largely very uninspiring product. But we'll leave that to the
yes,
viewers
yes.
to assess that one. All
So
right, what's next? I mean, I read in the news as if Starbucks needs to get even more convenient. I mean, next thing they'll just be pouring some coffee down your throat when you just think of having a Starbucks. They've now teamed up with the Shop It Like You Stole It format of Amazon. Talk about that.
yeah, well, the old joke that I think from the Daily Show that the first Starbucks opened up inside another Starbucks, but they're varying this. Yeah, they're testing in New York a
Hmm.
combination Amazon Go Starbucks store. And I think this is actually pretty interesting. Not that combining two different concepts is a totally new
Nothing
concept.
new.
We've seen this in food
Yep.
service in particular, and it's not
Hmm.
a shop within a shop. It's kind of designed in a coherent way. But what I think is most interesting about it is what Amazon Go brings to Starbucks. I think is they bring the technology certainly, but they also bring
Yep.
some additional day parts and additional
Hmm.
product lines. If you haven't been in an Amazon Go store, dear audience, Amazon Go, in addition to the walkout technology, is a convenience store in some respects, but it's very much geared towards the kind of the office worker takeout, lunch, snack kind of items. And so I think that's quite complementary to Starbucks offering, which is pretty light when it comes
Yep.
to dinner, lunch, and snacks. It's much more of a morning place. So I think
Sure.
that day part assortment is kind of interesting. And I think from an Amazon Go perspective, certainly a big traffic driver, a complementary item is coffee, and Amazon Go could offer their own coffee, clearly, but having the well-known brand associated with it. So we've got two companies from Seattle, just down the street from each other in Seattle, now just next to each other in one cohesive format. So we'll have to go see that, Michael, when we're in New York. But I think it's pretty interesting.
That's right. I mean, to me, it felt like the Hershey peanut butter cup, right? The guys from Amazon were walking down one street, and the guys from Starbucks in the other, and they kind of met. They met at the fish market somehow, bumped into each other, and said, "Hey, we should do a deal together." And you're right about, I do love the Amazon Go format, pre-prepared sandwiches, fresh wrapped, pre-prepared stuff. I just sat in the last time I was in a Go in Manhattan, and I was just watching the traffic and watching what people were buying, and it is very much grab a sandwich, go. So you're absolutely right. It's got a nice vibe. And again, you and I will visit. Hopefully we'll get the chance to visit. Not hopefully, we'll make a pilgrimage to go see the latest and greatest. We'll pilgrimage to see the latest and greatest in Manhattan when we're there for the NRF, which is coming up in mid-January. And once again, so just our guest today. Our guest today is Chris Bell, CEO of Perch. Great interview, fascinating business model. So why don't we just before we get to that, I'm just gotta run out and go buy some toilet paper. I gotta go stock up on toilet paper. But for now, let's introduce our great guest, Chris Bell, and let's do some chit and chat with Chris.